We're closing out the week with volatility across the board, certainly focused on the tech sector. And that's why this coming week is going to be so important. Nvidia earnings largely wrapping up earnings season in a week that also hopefully sees a little bit of data after the end to the shutdown, possibility of a jobs report over in the US, albeit just for September. And we see the inflation gauge coming out of the UK. So all in all, makes for a pretty interesting week ahead. So first and foremost, let's look at the breakdown in terms of the big ticket items for the week ahead. Monday, we've got inflation out of Canada. Then Tuesday, the RBA meeting minutes from Australia, trade data out of Japan. Wednesday, inflation from the UK, and we're going to be touching on that. Minutes from the FOMC on Wednesday as well. Thursday, existing home sales from the US. Inflation data again out of Japan this time, and then wrapping up the week with a big focus on PMI data, but also the UK with retail sales and those PMI numbers coming out of the UK. So let's kick off with the UK. By and large, probably the busiest area of the world when it comes to data. It comes off the back of a few different updates, really. I mean, first and foremost, inflation appears to be relatively under control of late. But you can see here that there's an expectation that could potentially change. So this could be a really interesting release up ahead. Now, we've just seen GDP figure coming in relatively weak. And we've also heard about the budget, that there's a possibility that we won't necessarily see a rise in terms of income taxes. So this coming week, of course, there's a feeling that this is going to have a significant impact on market expectations for the Bank of England going forward, because, of course, right now it appears to be the case that inflation is largely under control. Now, there's a perception that this time around we're going to see a surge in terms of headline inflation on a monthly metric, 0.5% forecast, 0.2 expected for the core reading. What would that do? Well, due to base effects, in actual fact, that would still drive down the year-on-year numbers. So make sure to keep an eye out for these monthly metrics in particular, and that gives us a better idea of sort of where we're going in terms of the near-term picture and in terms of the trends for inflation. Retail sales coming out on Friday alongside those PMI numbers. So all in all, it's really playing into a question mark around just what the conditions are within the UK economy in the lead up to a critical budget that's likely to put a squeeze on the UK economy. Now, if we look in terms of the inflation outlook, you can see here that by and large, whilst we have seen some gains on that year-on-year metric, particularly on the headline number, you know, we've been sort of treading water. And that's really because we've got that April inflation gauge. And beyond that, we haven't necessarily seen too much, really. We haven't seen inflation pressures in sort of radical rise. In actual fact, we've seen them largely under control. And that's why if we were to see a 0.5 metric this time around, it could be a bit of a concern. Now, from a sort of annualized perspective, as you can see here, the 5-month annualized points towards both core and headline being around that 2% target. So if you look in terms of the trajectory of inflation over the past 5 months, it has been consistent with a return to 2% for inflation. So that 0.5 figure, if it comes out, might not necessarily be too helpful on that front, but then we'll have to gauge exactly whether those drivers are temporary in nature and one-off in nature, or indicative of something that's going to have residual effects for the coming months as well. In terms of the outlook for the Bank of England, markets are now pricing a rate cut at this December meeting, 77% chance according to Refinitiv. And then from there onwards, you can see a potential additional cut in the sort of second quarter of next year, most likely. In terms of the markets, let's just quickly jump onto the likes of euro sterling first and foremost. This is one that we've been sort of talking about and trading quite a lot throughout this whole process. And as I've sort of alluded to, the idea of a Eurozone where the ECB essentially just draws a line under their easing process versus a UK with the Bank of England that's ramping up their easing process, albeit ramping up, I mean, it's still pretty slow, but easing nonetheless, that should change the yield differential between the two regions and provide upside for euro sterling. Now, we're seeing a bit of a pullback coming into play here, but the trend still remains in play here. So you can see higher highs, higher lows. You're likely to see pullbacks every now and then. So short-term weakness, yes, potentially. But if we do see that, then there's a good chance that we do ultimately see the bulls coming back into play once again. But really, you want to keep an eye out for how this data really informs market expectations for rate cuts going forward from the Bank of England, because that's likely to be a key determinant of whether we continue to see this sterling weakness against the euro play out, driving this pair into a further move towards the upside, which has been very clear cut and has been ideal, really. It's worked out really well. So from here on in, let's look at the US region. Now, I am fully aware of the fact that the US has had a shutdown and we don't necessarily know what we're going to see next week. I have tried to leave this to the last minute to record this video because I was hoping to see them come out with some factual announcements about the exact timing of the data that will come out. Now, what we have heard is that apparently the September data on the jobs front is already cooked, so to speak. That's not necessarily great terminology for them to use because it means that they've rigged it, but I don't think they meant it in that way. I think they meant they've pretty much got the data on hand. So I would expect to see jobs data potentially within this coming week. It's not currently scheduled on the economic calendar. Beyond that, there's a big question mark around the October data, and there's a good chance that we don't see it at all. That's a concern because, of course, we've got a Federal Reserve that's sitting on the fence. We've seen a number of members that at the moment are saying, well, inflation's a problem. We might have to keep things relatively restrictive to try and drive it down. And if they don't see the data, they can't really make themselves feel confident that they're actually heading in the right direction on the data front. So I think it makes it less likely that we do see a rate cut in December. The fact that we're not going to see data for October, or certainly it seems that way. So we have seen a shift. In terms of the data that's definitely on the calendar, the ADP weekly payrolls number will be interesting. We've now seen 2 weeks of that. They've been trying to sort of close the gap in the absence of the official data. We've also got FOMC minutes, which is a potential driver of volatility, then PMI numbers on Friday. Now, this comes at a time where we're seeing significant downside in terms of the tech sector in particular, but equity markets really have been suffering. And notably, it's really a momentum trade as well, because we're also seeing the likes of gold and silver heading lower, and crypto as well. These are the challenger job cuts, 153,000 job cuts that we saw recently. Remember, in the absence of the official data, we have seen a focus on the private numbers, the likes of the ADPs, the challenger job cuts. So if we do see the September jobs report, does it confirm that kind of trend, the deterioration of the jobs market and the need for the FOMC to act? That's what's really going to be key. If we see that September number, then we'll likely see a September reading in terms of the payrolls figure, and therefore we'll be looking in terms of it relative to the ADP numbers. Of course, you've got the ADP figures here, where that downside move came into play. And then we saw a little bit of a rebound in the last week, where we essentially saw a resurgence coming into play and a potential for a normalization in terms of payrolls. Now, what's notable here is that, of course, we have seen a rebound, but if you look from a historical perspective, that isn't necessarily something to shout about. It still remains a troublesome reading, essentially. So do we see the jobs report? Does it come in weak, much like the September figure on the ADP figure would point towards? Potentially. And what would the impact be? Well, markets at the moment are pricing a rate cut in December as a little bit above 50%. A month ago, that figure was above 90. And a week ago, that figure was close to 70. So we're seeing a loss of confidence around the idea that we're going to see a rate cut. So really, if we see economic data coming out and it's weak, do we see markets celebrate this off the idea that the Federal Reserve is going to be more proactive? Or do we see people taking that as part of the narrative that the US economy is rolling off a cliff and the tech valuations are unvalued, and people start really start ramping up the selling pressure that has been in play thus far? So it's certainly going to be a very interesting week ahead from the tech perspective, and the jobs numbers do provide the basis for the Fed to maybe ease in December, but also the potential basis for people to start becoming more fearful at a time where there's plenty of that going around. In terms of price action, I wanted to look at Nvidia first and foremost, and that's because, not Nvidia, sorry, the Nasdaq. So the Nasdaq, we can see here, has been losing ground. If we look at the daily time frame, a sharp decline at the open on Friday, but we found support at that 24600 support level, which I thought if it breaks that, that's pretty concerning, you know. But ultimately, we did break through trendline support, but now we found support and started to rebound. So does this level hold or not? If it does hold, yeah, maybe we managed to start to regain ground once again, and then it's a question mark of whether we can push up through this 25721 level. If it doesn't hold and we break down through that level, it could point towards further downside coming into play. But certainly for the time being, it looks like we could potentially see a bit of a buy the dip mentality as we close out the week. I hope so anyway. I don't necessarily like to see these markets heading lower in a meaningful manner, but certainly that's kind of how it looked like it was going to shape up at the beginning of trade. Notably, this does ring true for something that we saw last week, and that was a sell-off on Friday and ultimately closed out the week looking like that. Very confident that that's going to be a bottom candle, right? So are we going to see something similar this time around? Potentially. So watch out for how that Friday candle closes to give us an indication of what sentiment will be like going forward. Now, alongside this, another chart we're of course watching is gold. Gold has been an incredible outperformer. But one of the question marks I had within all of this was whether gold would perform well when equity markets were rolling over, because of course it is a haven, but at the same time, it has really been going hand in hand with equity markets throughout this bull run. And a lot of the time when we see markets rolling over, particularly when there's high volatility, you see everyone just selling out of all their positions, quite frankly. So there was always a question mark whether we were going to see a similar kind of thing coming into the fore. At the moment, we have seen exactly that. We've seen sharp declines as we see weakness in terms of the tech stocks. Now we're starting to see it sort of being brought up at the same time that the equity markets are also finding support. For me, there's question marks here also about whether what we're just seeing here is a sort of retracement. And so we've come into that 61.8. We're starting to see a bit of support, but certainly if we break the 3886 mark, it does point towards a wider pullback coming into play. Ultimately, you know, I didn't necessarily think we're always just going to manage to just break up higher and then just soar from here on in. We've seen such a strong rally. A lot of the time when you see that come into some sort of pullback, you can end up with like a good couple of months odd of sideways price action before you get on that. You sort of needed to build momentum again. You can see here the best part of half a year that we saw it. So I don't necessarily want to say for all the gold bulls, myself included, oh, you might have to sit on things for half a year. But, you know, you're talking about something that's, you know, only been running for a month. I think there's a good chance that we see some chop and things sort of shaping up for a bit of time. And so whilst we're selling off at the moment, yes, if we break through support, it could point towards a wider decline. But I just see this as us entering a little bit more of a phase that isn't just a straight line going up. But certainly one to watch for sure going forward. Now, finally, let's look at Nvidia, or certainly tech earnings anyway. Let's just get rid of my big head. Oh, that's too much big head. There we go. And so we can see here that we've got earnings from Nvidia heading up a week. That also sees Walmart, Home Depot, and some others report. But really, those are going to be the big three, and certainly the big two at the top there. 4.5 trillion and an 800 billion market caps. Nvidia, of course, is just going to be absolutely massive. It's coming at a time where markets are hugely volatile and hugely uncertain and jittery around the tech sector and the valuations. And what company has a bigger valuation than Nvidia? So I would look back and say the examples of previous tech earnings weren't great, because what often seems to happen is that even when they beat on the top and the bottom line, markets find a reason to sell it anyway. So they're likely to pick through the data and try and find something to hang their hat on. But it also could depend on price action coming into the announcement, because of course, if the stock's already been heavily down in the lead up to it, then it's more likely that people will be more forgiving. If it's been running higher and is particularly hot, then it's likely to have a higher bar. Notably, if you look at how things have done so far in terms of earnings season, and we're pretty much done now, 461 reported, you can see that it's been a great earnings season, in particular information technology, 22.4 growth in terms of earnings for that sector. So the tech sector's done incredibly well, but then it has to, because that's what markets are expecting over and over and over again. And so there's risk coming into this Nvidia announcement, that if this doesn't perform well, then of course it could take the market with it. And that's part of why we're possibly seeing these concerns really build, because people are worried about exactly what might happen in the week ahead for Nvidia. So in terms of the chart, what we can see here is that, there we go, price action has dropped down into this trendline support and finding support on that thus far. Let's just sort of grab that bottom. There we go. Always like to grab the bottom, right? And so, yeah, so we're grinding higher. We've got the creation of higher lows still in play. Certainly, if we start to break down through your sort of swing lows, the likes of, here we go, 176, then obviously the 164s, then things start to look more troublesome. But for the time being, we're sort of tootling along. We've seen that rebound coming into play, the pullback, then the gap higher on the shutdown news. Now we've pulled back into trendline support again, and now starting to move higher once again. So some people see this trendline as an opportunity to buy the dip. Others won't be touching this because we've got earnings up ahead, and they will either trade the earnings or wait and then trade after the earnings. But certainly this is going to be the big ticket item for the week ahead. Never mind your economic data. If Nvidia earnings go south, then it's going to take everything with it. But we've grown very accustomed to Nvidia earnings doing very well. And so there's a question mark of how well is needed for them to be able to continue on this bullish run that has been playing out. I hope that's been useful. Make sure to like, subscribe, and follow for more. Stay safe out there. There's a lot of volatility. It's good for some, not so good for others, but certainly there's a lot going on, and it's really interesting trying to see how some of these correlations stick or don't stick, and seeing how things that are commonly perceived to be havens don't hold up as havens in certain scenarios. So really interesting time. But yeah, it's going to be another big one in the week ahead.